Right, everyone, here we are with ticker symbol SRNE, Sorrento Therapeutics Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Sorrento has actually fallen into a bearish trend now. The bulls tried to reappear, right? They tried to take over this and bring it back up over the 50-day moving average, and quickly the bears tore them down to newer lows. This is the lowest point that we've reached now, our new support level. So we're going to take a look at that in just a second. And this resistance level was not able to be attained and be broken through. So this is very important for the bulls to actually break through 1061. I'd write that down. That is one of the highest peaks in the slight recovery after falling to these new lows. And now the bears have brought this down to even newer lows. So as of right now, Sorrento is in bearish territory. It's been in it since October 13th, and it's actually going to have to work its way back up, and the bulls need a breakthrough the 50-day moving average to get this back into bullish territory. So let's look at the new low here and how important it is for Monday and even the upcoming week. And let's look at our highest point here in the last hour of the days and how important it is for the bulls to break through this as well. So right now it's currently at 965, and the bulls need to break through this highest point reached within the last hour, and that was 985. 985 is a good sign that the bulls, if they break through this and turn it into a support, that they're working their way towards back into bullish territory. That's very important, because that way the bulls can actually start to work their way up to newer highs and newer resistance levels and break through the 50-day moving average, which is 994. I'd write that down. As long as we're below it, the bears are in control, and as long as we're above it, the bulls are in control. So 994 does need to be crossed by the bulls so that this can get back into bullish territory. So 985 does not mean that the bulls have gained control, but for us investors, this is a signification that this is heading in the right direction. There's some momentum being built, and if the bulls turn that into a support, they're not that far away from breaking through the 50-day moving average and getting back into bullish territory, and they can use that momentum to hit newer highs and new resistance levels. So before getting anywhere up here, 985 needs to be broken through by the bulls and turn into a support so they can break away and hit newer highs. Now, on the other hand, we have what the bears want. The bears want to tear this down, and they want to try to hit newer lows. So my emphasis here to all investors is pay very close attention to how this stock is reacting if it breaks through support, which is 929. If 929 gets broken through, this could be well on its way to newer lows and newer support levels fairly quickly, because it's hitting new lows. This is the lowest point in this bearish run from being at this high up here at 1213. And in this whole run in a downward direction, this is the lowest point and the support level that has been formed since this bearish run begun. So if 929 does get broken through, this could be on its way to newer lows, pulling further away from the 50-day moving average in a downward direction. So I emphasize to all investors, pay close attention to how this stock is reacting. How quickly is it moving to newer lows? What's the outflow and the inflow? Put your 1 minute, your 5 minute, your 15-minute charts to see how it's reacting and who is dominating the charts. Check for that. And as it continues to play out, pay very close attention to the behavior. And is it moving quickly to a newer low, or is it hanging out sideways, giving a chance for the bulls to reappear and start to bring this one back up? As always, if you found this video helpful and informative, please do so and subscribe. Share this with your friends and community. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. And don't forget to hit the like button to let me know you watched this video. Again, thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So Right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.